All right, today we're going to dive into what is honestly one of the most wild corporate turnarounds I've seen in a long time. This is the story of TeraWulf. We're talking about a company that was basically staring into the abyss, and instead of backing down, they just went all in, making a massive billion-dollar bet on the future of AI.
So to really get what's going on here, you have to think of it like a tale of two companies, both living under the same stock ticker. You've got the old Wulf, which was a struggling crypto miner, facing a legitimate existential threat. And then, almost overnight, you have the new Wulf, a massively funded developer building the very backbone for artificial intelligence. So how in the world did they pull that off? Well, it all kicked off with a major crisis.
So, for TeraWulf, the problem wasn't just a simple market downturn. No, this was something much more fundamental. We're talking about a flaw that was baked right into their business model, and it was about to get exposed by an event that's literally programmed into Bitcoin's code.
Now, for anyone who's not familiar, the Bitcoin halving is, well, it's pretty much exactly what it sounds like. About every 4 years, the reward you get for mining a new block of Bitcoin gets cut in half, just like that. So if your entire company is built around mining, this means your revenue gets instantly slashed. It's a really brutal, but also completely predictable shock to the system. And this is where you can really see the perfect storm brewing. So while their revenue was getting cut, their costs were just exploding. Just look at this timeline. Their power cost to mine a single Bitcoin went from under $23,000 to a projected cost of over $66,000. Their business model wasn't just in trouble, it was becoming completely unsustainable.
So, this brings us to the big question, right? The one that was probably keeping the entire executive team up at night. What do you do when your costs are basically doubling, but your revenue gets cut in half by design? What's the move? For TeraWulf, the answer was a pivot. A huge, monumental pivot.
You see, they were facing a classic infrastructure death spiral. They needed to spend a ton of money that they just didn't have to make money that they weren't earning anymore. It's a terrible spot to be in. So, in this desperate situation, they made a monumental choice. They went big. In fact, they went billion-dollar big.
First up, they solved their cash problem. And how? By raising an incredible $1.025 billion. They did this with something called a 0% convertible note, which basically means they secured over $1 billion in capital without having to make any immediate cash interest payments. So the big question is, how in the world did they convince investors to sign on to that?
Well, they pulled it off by securing this: a new joint venture with a 25-year contract to build and operate AI data centers. And this wasn't some small deal. We're talking $9.5 billion in total contracted revenue. So basically, they used the promise of this huge, stable income stream to get the capital they desperately needed to build it.
And this is the part that really made the deal irresistible to investors. You see, the project wasn't just some speculative idea. It was explicitly backed by a $1.3 billion lease commitment from Google. Yeah. Having a name like that on your project, well, that's the kind of credibility that opens up the checkbooks. That's how you get $1 billion. And this table, man, this just shows you how completely the deal rebuilt the company. The transformation is just staggering. Look at their cash. It jumped from $90 million to over $1 billion. Now, yeah, their liabilities also went up a lot, but now they actually have the capital and, more importantly, the contracted revenue to manage that debt. They literally went from being cash-starved to a heavily capitalized developer, practically overnight.
So what does this new company actually look like? What is the new Wulf? Well, it's no longer a bet on the price of Bitcoin. Forget that. Now it's a bet on the absolutely insatiable demand for AI compute power.
And this comparison, wow, it really says it all, doesn't it? The old mining business was looking at maybe $60 million in IBIDA with a 43% margin. But the new AI infrastructure model, the guidance is for a potential $1.5 billion in IBIDA with an absolutely incredible 80% margin. This is why the pivot was an existential necessity. It wasn't just a good idea. And it's important to note, TeraWulf isn't totally alone in making this kind of shift. The whole sector is kind of waking up and realizing their biggest asset isn't the mining rigs, it's their access to huge amounts of power. But as you can see here, TeraWulf is way out in front. They're a leader, not a follower, especially since they've secured a top-tier partner like Google and have the money to actually execute their plan.
Okay, but a plan this big, this ambitious, it's never without risk. Of course not. So what could go wrong? Let's break down the bull case versus the bear case for the new TeraWulf.
All right, so the bull case, the reward is pretty clear.
You've got contracted revenue, and it's backed by Google. You have about $1 billion in cash to build everything. It's all there. But the bear case, the risk, is just as obvious. This is a massive project with extreme execution risk. Can they actually pull it off? They're also carrying a huge debt load of over $1.7 billion, and there's a huge potential for shareholder dilution down the line.
So the final verdict here is bullish. And why is that? Well, because TeraWulf has successfully traded one kind of risk for another. Think about it. They've swapped the wild, unpredictable risk of crypto prices for a much more straightforward risk, project execution. And because their growth is de-risked by that long-term contract and they're fully funded, the potential upside is seen as outweighing the very real challenges of actually building this thing out.
And that leaves us with the final massive question. TeraWulf has traded the chaos of the crypto markets for the cold, hard risk of execution. They made a bold move, a necessary one. The stage is set. The money is in the bank. The contract is signed. Now all they have to do is build it. So the question is, will this billion-dollar bet build the future of AI, or will it all just buckle under the weight of its own ambition? Only time will tell.